you know, the collapse of FTX, you know, may have come much later, but before then, right? Like they were engineering the tops of this market, and they also were engineering the top of this market. So if there is a company right now, whether it's Binance or some other company, maybe BlackRock or blah, blah, blah. I don't think BlackRock would do it, but, you know, there's other companies that are a little bit sus, all right, like Binance. You know, I don't know exactly what was going on, but, you know, the same way that Sam Bankman-Fried engineered the top over here to have this rounded top to be able to double dip instead of having a blow off top. Because think about it. You know, this cycle was supposed to go to 100K. Well, take this, right, and invert it at support up here. $100K. So the amount of movement on this price action right here, okay, this is the amount of money that they would have made in the system had, you know, we gone to 100K. And what did they do? They just made it here instead. Okay. And they left retail out. FTX engineered this top in order to shake out retail so that they could get all of the altcoins for dirt cheap. And then they engineered an altcoin season when there was not retail FOMO, so that FTX was the beneficiary of it, not retail. Okay. Remember, everything went down 90% in this crash as well, right? Started right here. Right? Started right here. And then we got this little bounce. Everyone thought it was game back on to 100K. Everything was programmed for 100K. Yeah, it was. They just inverted it. And they still made the exact same amount of money, right? The institutions made the same amount of money. Why do I say the institutions? Because the institutions create the bottoms. You know, retail doesn't create bottoms. Institutions create bottoms. You know, they go in with a large sum of money and they just decide, we're going to buy here. And that creates support for everyone else in the market. Okay? Their footprint creates the bottom. So, you know, FTX engineered this top. They did the same shenanigans that we're seeing happened right now. And then they engineered the bottom and brought it up to the exact level that this market was projected to go at. But they took advantage of it entirely and left you guys out. Now, fast forward, could something like this be happening again? Right? There was very, 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 very big shenanigans happening here. Okay, this drop. This drop is not the same as this drop. There's something totally qualitatively different. Okay, and you know, this is an old drawing that I had here, but we can just kind of, modify this a bit, right? And if you look at this as a rising wedge, well, you know, if they wanted to engineer it as a top and they don't want the blow off top, right? Or if they want to delay it for themselves, let's just say that we, you know, let's go to the weekly here. All right, let's just say that we have a macro projection of somewhere like a critical high at 180, okay? You know, for a blow off top, that's actually conservative. Like a blow off top could go to 250K, okay? Like, we don't know like where that one could stop exactly, but a reasonable range is 180 to 250K for a blow off top. You know, for kind of like a more reasonable top, you know, 130 to 150. Okay, that's a pretty reasonable expected, you know, top. Maybe even front running it a little bit. Okay. And so, you know, even back here, which would have been months ago when I drew this thing, because I'm on a different chart than my standard chart. Okay, I was suggesting like if they really wanted to screw up the market, like they could do something like this. And if they're engineering a top here, and if we notice that this candle was 100% manipulation, and if they do that same strategy that FTX did last cycle, and they just bring it up like this, and this just ends up being a pitiful pity bounce, right? Well, what's going to happen is that we have a measured move off of this volatility system, right? And we could take it like an extreme. Let's just take like a modest measure. Okay, just kind of average it down. We could do an extreme. Here on the weekly, you know, our weekly 200 and 300 could rise up, right? So we have this kind of like 70 support area down here. Now let's take our bull run blow off top projection and just do the same thing that FTX did last cycle, right? And what would this bring us into, right? Everyone says, we're going to go to 200K. We're going to go 100 to 180K. We're going to go to 250K, right? The cycle. It's pre-programmed, guys. We're going to a 200K, right? Like everyone's saying like that same stuff. Like, aren't you just hearing everyone say 200K again? Like, it sounds like last cycle when everyone said we had to go to, we had to go to 100K. Isn't it the exact same stuff that you're hearing? It's 200K this time, right? And so, you know, if they found that that worked really well last cycle, and if this drop really was as manipulated as it looks like it was, there's a lot of autopsies being done now with some advanced tools. Like a lot of people are catching it, right? And if we just start curving over and we start breaking down from this rising wedge, that's why I tell you guys, I'm going to be the hell out of this market because I've been there before. I saw what they did before. I cut my teeth on altcoins during that kind of mess, right? So I learned my lesson. And then I'll let them bring it down to wherever they want to bring it down to. And if they want to make their money that they would have made here on the bounce of that next low, and then this market just ends up double topping, okay? And then our ultimate low for this market, right, ends up being, you know, maybe not 20K, right? Because this thing's, you know, maybe they make a higher high or whatever. This thing's still going parabolic, right? But maybe in this 40K area, right? Maybe in this 40K area, we have a lot of support, you know, a lot of support back here. This was support, this was support, this was support. This looks like a little diagonal right here. Right? This looks like a little diagonal right here that could catch us. You know, and then we have like this extra layer below us, right? It's kind of like safety. So if they do break down and then double top this market, I'm just telling you guys, like, this is where I'm going to be watching for a critical low. Okay, for the next bear market. And you guys and I will be using all of my best methods on how I caught this market, right? And called a bull market down here just to do it again. And we're going to do it again. Okay, we're going to do it again together. And this time you're going to, you know, listen a little bit closer about not buying like micro caps and just crap, right? I'm going to focus on the high quality stuff. Let's look at the monthly. Trillis. Yeah, I'm talking to you, Trillis. Yeah, and I mean, look, if we pull a diagonal here, look at this, right? Like that's the bottom. That's the bottom, you know? It's a diagonal bottom right there. Assuming that that's how it goes, right? And, you know, just because we had a higher high on this one, you know, you don't necessarily have to expect that they're going to make a higher high on this one. This could be a dead cat bounce that just comes up to this shoulder. Like, it could just come back to 100K. It doesn't have to make a higher high. That's a dead cat bounce, right? It's, you know, it's more likely that a dead cat bounce doesn't make a higher high than it will make a higher high. Okay, so again, like, just get out and then be humble about our moves. Because for the market makers, I mean, and by that I mean like all the guys, like all the institutions and everything, right? Not the actual market makers, but for all the institution stuff that play these shenanigans and corrupt, you know, the process, they don't care if they make their money here or here. Like I proved it to you guys. And the autopsy of FTX last cycle, you know, once they went down, right? They got all their notes and stuff. They learned what they did back here. And, you know, I can learn from history. Most of the market will not learn from history. And that's why they're really incentivized, right? That's why Binance, right? If it ends up being Binance was in collusion with all these manipulators and stuff, you know, Binance may have just been like, man, I wish I was, you know, I wish Binance could do that this cycle the way the FTX did that last cycle. That's a pretty big incentive. This was the biggest alt season on history. This could be the biggest alt season on history. It could just be after a collapse. So, guys, I don't think like you're late. Like, just look for bullish structures, have your risk management, understand where we are at the cycle. Okay, understand that we're in the, we're in the final stretches of this cycle. We're not in the beginning anymore. And so anything goes up here. This is not the area to be buying. Okay, and there's going to be a lot of numbskulls out there who are just saying like, I'm bullish, I'm super bullish, and like, 100% in the market. I'm telling you, like, this is the end of the cycle. Like, this is the territory where we're getting to the end of the cycle. This is the froth that we get in. Those calls for 200K, they may pan out, right? Like 100K was on the table last cycle. It was on the table, but the manipulators took it in another direction. And if everyone has the same targets, it becomes exponentially less likely to happen. That's just how markets work. So everyone's saying 200K now. It's starting to make me feel a little worried. All right, like I wish they had changed the narrative to like I wish everyone thought like we were going to collapse to 70K. Okay, then I'd be feeling a lot more confident about 200K. Right, but we have to overcome this high, and we're not out till we're out. Right, so let's go to the weekly. And let's go ahead and throw on my warning EMAs here. Let's see. Did we get the warning cross? Right here was a warning cross, okay? And right here was a warning cross. See that? That's a bearish cross right there. I don't know if you can see my two little red lines. That's a bearish cross right here, right in the heart of this top. Look at how those red lines just ended up collapsing. Okay, like we're in danger of getting underneath those red lines again. And that would remind me right here. This one gave us 1, 2, 3, 4, 5, 6, 7. Let's just call it 8. This gave us 8 weeks. Okay, 7 to 8 weeks. That was a massive collapse. Before a massive collapse. Where did we cross here bearishly? Right. This is my front runner, bear cross. 1, 2, 3, 4, 5, 6, 7. Oh, 7 or 8. Right, like a, like a. I'm superstitious. All right, let's go back here. Uh-oh, there's my bear cross. 1, 2, 3, 4, 5, 6, 7. Uh-oh, 8. Okay, this one was just a glance, right? Best case scenario, we do something like this. Push back up and keep running. Like our hopium is that we get a structure like this. It just starts going up and it just doesn't look back, guys. We don't want it to look back. We want it to keep going. Okay. When we're at these levels in a market, it has to keep going. Okay. You don't want to start looking back at these levels of the market. Here, right? Here's my bear cross, the next candle, right? But, here was my bear cross, right? Let's call this 1 week, 2 week, 3 week, 4 week, 5 week at most. 4 to 5 weeks we had. Okay. Is this cycle playing a little bit nicer, maybe? Yeah. Here was my bear cross, 1, 2, 3, 4, 5, 6, 7. Uh-oh, 8. Okay, deja vu. Here was my bear cross. The very next week, it was over. Okay, so the very next week, it was over. So, in the macro, I take you guys into this stuff and I give you these warnings not to scare you, just to let you know that if I can see that, institutions can also see that. And so, what would incentivize somebody like a big institution or Binance to start doing manipulative BS? Well, let's just say that their positions are all are all spoofed up, and they're all on leverage. And what they don't want to happen is for them to be deleveraged by somebody else. They would rather be the ones that delever the market. And so some of these institutions are so levered up, like you wouldn't believe how levered up they are. They could be 100 times levered up. You wouldn't even, you can't even calculate what's going on behind the scenes. Okay. And that's why it was either FTX who was going to die or it was Binance who was going to die last cycle. One of them was going to die because they were all levered up against each other. Okay. And into each other's assets. And they were all massively, massively levered up like that against each other. And the war that happened on Twitter between CZ and Sam Bankman-Fried, the back and forth that they had for those, and I think it was like a week before the collapse or whatever, that was them playing chicken with each other. Like, you're going to do it? If you're going to do it, I'm going to do it. Like, I'm going to do it first. Like, you better not. Like, and they were talking about each other's assets. They were like, we have a lot of BNB. And, Binance was like, yeah, well, we have a lot of, whatever FTX token was, right? I forget what it was called. FTT. Like really silly conversation. Like people were laughing about it and having a great time. They just lost everything they owned. Well, we just found that same type of manipulation happened in this last candle. Okay. Somebody massively deleveraged somebody else on purpose. So the game is starting. Okay, it's no longer institutions versus individuals. It's no longer individual versus individual. It's now institution versus institution, and that happens at the top of markets because they don't want to be the one delivered on the way down. They will not exist at the end of the market. So that's my severe warning. Okay, that's my severe warning. And I think that is very, very practical advice, okay, for anyone not familiar with crypto. It's a story everyone has to know because it's the story of this market. But as day traders, right, our job is not to be driven by fear, just like our job is not to be driven by FOMO, right? And I have to provide the fear aspect just to counter the FOMO. Well, because a lot of guys are saying that they missed out. They missed out on this little bottom, right? But it's not the full picture, is it? You gotta kind of have to put both of them together and understanding you're just navigating a very dangerous territory. And that's what allows you to come back to my perspective. If you wonder like how I'm centered around 20 to 35% being a great return, and just moving those stops up to entry as soon as possible. And if I ever get 100% return, I'll just take my initial out and leave the rest in as a moon bag because now it's a risk-free trade. That's where I'm coming from, right? Maybe your coin didn't hit the target that you wanted it to hit. Doesn't matter. You still move your stop loss up. And if you get stopped out, who cares? You got stopped out in profit. You weren't just like you weren't just a moon boy just leaving everything in. That's a lot of money, right? In a house of cards. And if we could just get those small bites, that 20 to 35%, 9 times in a row, that's a 10x on our portfolio if we increase our position size, relative to our gains. We don't have to 10x in one move. We can 10x in 9 moves, and that's actually better. Okay, because there's been a million of those moves on this path. There's been a million of them. In 20 million coins, there's been a million of them. And the number of 10x's and 20x's have been very few.